Hello friends, welcome to the special marathon of all in one, all modules in one. Why am I calling it special? It is special because if you have watched me since last one and a half week, since last Monday, I have taken all the marathons, BFM module A, module B, module C, module D, previous year questions 1 and 2, two times I have taken 2 days. Then I have taken a combined marathon of A plus B and C plus D. So almost 6 plus 2, 8 marathons have been done. This is the 9th one. Tomorrow will be the Maha marathon, then will be the revision. So net you are getting 11 marathons roughly. Tomorrow's marathon will be for 3 hours and day after tomorrow will also be for 3 hours. So do attend it without fail. So why am I calling this special? Because this will cover all the modules, all of them, okay, in one go. Of course, the questions will not be the same which were there, which were taken earlier. So that's why follow all the marathons. Questions will not be the same. They are not repeated. They are different. Okay. So follow each one. Got it? Each question is repeated. Each question is repeated in the exams. And none of them are repeated in the marathons. Okay. So follow them without fail. First one is which type of LC is available for transfer in full or in part in favor of any party other than the beneficiary by the advising bank at the request of the issuing bank? Irrevocable LC, revocable LC, irrevocable confirmed LC, transferable LC. So which type of LC is available for transfer? Okay, transfer in full or in part. What do you mean by transfer? See, this transfer happens when our party or the seller party is an agent. Seller party is an agent. Okay, means what? Suppose if I get an order of, let's say, preparing 1 lakh chairs from, let's say, USA, buyer, he gives me the order. Okay, he gives me the order of 1 lakh chairs. Now the problem is me. I am the seller in Bharat. Okay. Now the problem is I am the seller, but I am not the manufacturer. I don't prepare these 1 lakh chairs. So in that case, what will I do? I'll find someone who prepares 1 lakh chairs as per this whatever agreement is. So I'll transfer this to, let's say, Mr. A. What will I do? I'll add my commission. Suppose if I'm getting this for, let's say, $1 lakh. Okay. I'll give this guy, let's say, $80,000. So 80K. 20,000 I'll keep it as my commission. Risk. All these things, isn't it? This is known as transfer LC or transferable LC. When you are transferring this here, available for transfer in full or in part. See, full. This I can transfer it to 2-3 guys also. B also. Some part. 50,000 chairs to A, 50,000 chairs to B. I can transfer it to anyone. I can transfer it to 1,000 guys. Okay. So, 1 chair for 1 lakh guys. I can transfer it. First level, any number of transfers is allowed. But after this, B cannot transfer it to someone. Kindly note. The second level transfer is not allowed. First level transfer, any number is allowed. Second level transfer is not allowed. So this is known as transferable LC. Irrevocable, many of you might be knowing. So the answer is this, transferable. Irrevocable, many of you might be knowing. Irrevocable means what? That LC which cannot be cancelled without the consent of all the parties. Which are the parties? Issuing bank, applicant, then your advising bank, confirming bank, negotiating bank, beneficiary means seller. So we can't cancel this LC without the consent of all these parties. Revocable is exactly opposite. It can be cancelled any time by the issuing bank, anytime. If the issuing bank wants, it can cancel any LC which is revocable. Okay? Confirmed LC means what? Confirmed. Confirmed means additional guarantee of payment. See this LC issuing bank, this is the buyer. So he will go to his bank. His bank will issue, see this, LC is never issued by the customer or any party. It is always issued by the bank, issuing bank. So here the payment guarantee is from this issuing bank to me, to the seller. Now if there is a third bank in my country only, Bharat, let's say SBI. SBI says, I will confirm this LC. Means what? SBI is giving me an additional guarantee of payment. So I am getting two guarantees now. One from this foreign bank, one is from my local bank. That is known as my confirmed LC. Okay. Now in this transferable LC, there is one more term which many of you get confused. Although this is not a part of this question, but I'll explain you because this comes in exam. That part is called as back-to-back LC. What is that back-to-back LC? Let's see. See this. The difference between back-to-back and confirmed. Transferable. In transferable LC, what do I do? This is the buyer in USA. His issuing bank has issued me a LC1. LC number 1. This issuing bank has issued me. This LC number 1 is coming to the seller. Now this seller is an agent. Seller is not the manufacturer over here. Seller is an agent. So what is happening over here? This seller will transfer this LC further. See, transfer this LC means what? Same LC, LC1, it is getting transferred to LC1, LC1. Look at this. LC number is not changing. Same LC is getting transferred to A and B, full or in part. Right? 1 lakh shares, I can give 50,000 over here, 50,000 over here to A and B. Or I can give complete 1 lakh to A only. I'll keep my commission and give it. But remember, the same LC is transferred. Now what is back to back? Back to back over here means, see this buyer in USA is giving me this LC number 1. So what am I doing over here? I am keeping this LC number 1 as collateral. Kindly note this. This LC number 1 I am keeping it as collateral with my bank. With my bank, okay? Any bank it can be, with whom I am having the account and regular transactions. So I'll keep it as a collateral and kindly note, I'll issue LC number 2 and LC number 3. LC number 2 and LC, separate LCs. So whenever I issue separate LCs, it is called as back to back. Whenever I issue the same LC, transfer further, it is called as transferable. Otherwise, logic is same for both. Okay. So got this point? So the answer for this question was transferable LC. Got it? Now next. Which of the following factors contribute to the operational risk in outsourcing bank activities? Outsourcing. When I outsource the bank activities, what can be the operational risks in this? Watch everyone, read this. Processing high volume transactions in short term, intraday payment risk, controls breakdown due to conducting operations in various geographically dispersed locations. Various geographical dispersed locations. So what can be the risk? Processing high volume transactions in short time means what? Here, whenever I outsource this, what can happen? The other guy who's processing this transaction, here I have outsourced means what? I have given the job to you. In your location, I am in Mumbai, let's say you are in Delhi. So I have given this to you. I don't know how will you be doing it. I give you for the full day. You might do it in some short period. So high volume transactions in short time, this can be the problem. I don't know what that other guy is doing, because after all it's an operational risk. I might do it sincerely, but this guy, the other guy, might be doing it only for 1 hour, 2 hours. Complete transactions in 1 or 2 hours. So short time, it can be the problem. Intraday payment risk, that is also a point. Because I have outsourced, now the linkages will increase. Me to the outsourced guy, so outsourced person will transfer the payment to me, I'll transfer it to someone else, that someone else will further transfer it to that customer. So one link is added. So intraday payment risk, if the payment doesn't come to me from you, if there is an outsource thing, if there is a term, let's say, regarding the payment and it doesn't come, then this can be the problem. Okay? Controls breakdown. This can also happen. Controls breakdown means what? I am transferring this job to various locations. I give you the example. I am in Mumbai, you are in Delhi. Suppose. So what happens in this? You are only in one location. I can transfer this job to 10 guys in different locations. One in Delhi, second in Rajasthan, third in Mumbai, fourth one in Chennai, fifth one in Kerala, somebody in this Karnataka. So I might transfer it to 10 locations. So if I transfer it to various locations, there will be a controls problem, right? Controls will be, definitely it will be there. So the answer is 1, 2 and 3. All the three, because these are all related to operations. And whenever you are transferring the job to anyone else, you don't know. In that case, you have to be very clear about the tax. Okay, it shouldn't happen that you pass on the job and that other person is doing it at his wish and will. Not allowed. Okay, got it? Read this. If a 7% daily BAR of 5% in the treasury management, it means which of the following? There is 97% confidence that the security will not incur the loss greater than 5%. There is a 95% confidence that the security will not incur a loss of 7%. There is a 93% confidence that the security will not incur a loss greater than 5% in one day. There is a 95% confidence that the security will not incur a loss greater than 5% in one day. So which one of them is correct? See this. 7%. What does this 7% means? 7% chance of happening this event. Means what? 7% chance that my risk will go beyond 5%. Everyone pay attention. Very important term. Okay? Look at this. This is very important. 7% chance that my risk will go above 5%. I'll write it in short term. 7% possibility, chance that my risk will go VAR or my amount this changes, okay? Fluctuation. This amount fluctuation will go beyond 5% in one day. Beyond, above 5% in one day. So 7% chances that my VAR will go or fluctuations will go above 5%. Understand this word. Now next sentence is very important. If 7% chance that it may go above 5%, then pay attention. 93% chance, 100 minus 7, that it will always remain within 5%. So 5% within, less than or equal to, is less than or equal to. So this is greater than 5% chance that it will be greater than. So there is 93% chance that the VAR or the fluctuations will be within 5%. So now look at the answer. Everyone pay attention to this part. 7% chance is for going above 5%. So 93% chance is for within the limits, right? So now what is the answer? There is 95% chance, 95 not, it should be 93. 93% chance, okay, confidence level that the security will not incur a loss greater than 5%. Okay, not incur a loss. It is same, na? It's over here. This one. Okay. So the answer is C. C is already given, right? C is already given over here. So the answer is C over here. There is a 93% chance that the security will not incur a loss greater than 5%. Got it, everyone? There is a 93%. This logic of 7% and 93% is very important for you. You must understand this very clearly. Okay? Got it, everyone? Next. Consider the following statements regarding collateralized borrowing and lending obligations, CBLO, and choose the correct one. Now, firstly, what is CBLO? What is CBLO? What is CBLO? See this. We'll divide this finance sector into two parts. One is banks and second is non-banks. Non-banks means let's call them NBFCs. Simple, NBFCs. Banks and NBFCs. Okay, two parts will divide it. Banks, if they want low cost funds, banks, if they want low cost funds or they want liquidity to handle, they want to handle the liquidity. What can they do? They can buy and sell T-bills, treasury bills. T-bills, they can buy and sell. They can buy and sell. So they can manage the liquidity, buy and sell both. Okay, they can manage their liquidity, current payment requirements using T-bills. But this facility is not available to NBFCs. NBFCs don't purchase T-bills. So this is a low cost option. T-bills are always charged at low cost. So banks are getting funds at a low cost because of this T-bills. But this facility is not available to the NBFCs. So what will they do? Should they always buy the funds at a higher cost? No. What do? They use CBLO. CBLO is mainly for them, NBFCs. Collateralized borrowing and lending obligations. Here, instead of buying these T-bills, they buy and sell the debentures. Okay? At the lowest cost possible. That's why see this debentures will always be charged higher than the T-bills. The rate will always be higher than the T-bills. That's why you see, you give the home loans at what rate? At banks. 8.5, 8.25 to 8.5. This is the range. What is the ROI for NBFCs? Have you checked? Check the ROI for NBFCs for home loans. Minimum rate of interest which they give is around 11, 12. Minimum around 12%. NBFCs. Why? Because the cost of funds is debentures. They buy and sell these debentures and other bonds also. Not only debentures, other bonds also. Other private sector bonds. Okay? But these are always charged higher than the T-bills. So that's why their cost of borrowing is a bit higher. So that's the reason. So let's move on to the question now. Choose the correct one. It is traded in the secondary market, bought and sold in the secondary market. It can be readily encashed at the requirement of the lender without waiting till the due date. Readily encashed. Readily encashed means what? I can sell it to anyone. That's the main purpose, isn't it? That's what we call it as liquidity. Liquidity means what? I should be able to sell anything very fast. Okay, that is known as liquidity. Settlements of CBLO take place through Clearing Corporation of India, CCIL. So which one of them is correct? Traded in the secondary market, very good, correct. It can be readily encashed, correct. So 1 and 2 are correct. CCIL, Clearing Corporation of India, this is the base of any trading in our country. Any trading. Okay, this is settlement is always done by CCIL. So that's why this is also true. So the answer is 1, 2 and 3. Got it? The answer is 1, 2 and 3. CBLO, kindly note this concept of CBLO should be known to everyone. This is parallel to T-bills. Okay? Which of the following factors determine the need for liquidity? Need. In case of bank, variability in the loan demand, variability of the deposits, cash needs. So simple. What is the answer? Basic question, isn't it? Need. Which of them gives the need for variability? Variability in the loan demand, obviously. If urgently I get some loans, some good business I am getting, oh my God, I am getting a big loan, means I am able to sell a big loan. So for that I need money, liquidity. Variability of deposit, some depositor of mine wants to take out the funds immediately, today only. He wants the deposit of, let's say, 100 crores gone. Of course, it is bad for the bank, but I need to give him money, isn't it? For that, I need liquidity and cash. I need cash for my daily operations also. So it is 1, 2, 3, all. Correct? A non-performing asset is a loan or an advance where? So what is an NPA? NPA. Interest earned or installment of the principal remain overdue for a period more than 45 days. The account remains out of order in respect of overdue cash credit, ODCC. The bill remains overdue for more than 45 days. In case of bill purchased and discounted, the installment or interest of principal or interest thereon remains overdue for 2 crop seasons for long duration crops. 2 crop seasons. So which one of them is correct? Now this you have to answer. You will get confused between, I will tell you, B and D. B and D. Of course, A and C are wrong. You know it. They are wrong. This is wrong. This is wrong. Only fight is between B and D. Think over it, everyone. Yes, what is the answer? What is the answer for this? Is it 2 crop season for long duration crops? So this is also wrong. It is 2 crop seasons for short duration crops, short. And for long duration crops, it is 1 crop duration. 1. Short, it is 2. Long, it is 1. Okay. So the account remains out of order in respect of ODCC. This is right. Continuously, if any account is out of order, it means what? There is a problem. What do you mean by out of order? Out of order means, suppose if I have sanctioned you, see, okay, now I'll remove all this plus and cross, or shall I keep it? Let's keep it. Suppose if I have sanctioned you a CC of, let's say, 1 lakh. Now I'm giving a smaller figure. I have sanctioned your CC of 1 lakh. Okay. Every month I'll have to calculate the DP, drawing power, using your stock statement. Stock plus debtors minus creditors, 75% of that. Okay. So I'll be calculating the DP. So let's say the DP is DP, drawing power. DP is for this month, present month, is let's say 80,000. So as a banker, I'll always allow you to use only 80,000, not 1 lakh. Even though I've sanctioned 1 lakh, but I won't allow you to use more than 80,000. Why? Because DP, drawing power for this month, is only 80,000. Next month, if your DP increases, I'll again allow you a higher amount. So DP means that. So my loan should never go above this CC sanctioned amount and DP, whichever is lower. Now, if this loan means if I am the customer, my loan continuously goes above, let's say this 80,000, it is continuously 85,000, continuously. Okay, continuously it's 85,000. Then it is called as out of order because it is going beyond the DP or the CC, whichever is lower. So when such situation arises, it is called as out of order. Got it? Read this. Which section of FEMA defines foreign exchange? Now this I wanted from you. Everyone. Give me the answer fast. I'll wait for this because this, by now you must know this answer. By now everyone amongst you must know this. Yes, what is the answer? Everyone, what is the answer? Let me see in the comment section. It is section 2. Section 2 defines your foreign exchange. What does it define? Here, I won't give you the full definition. I'll just give you the summary, means 1 or 2 words about this. Okay, what does it define? What is foreign exchange? Foreign exchange is basically the dollars or the foreign currency which I am holding, or secondly the contracts which I am holding regarding the forex. Contracts. Now currency can be in form of traveler checks also. It can be in form of cash also. It can be in form of TT also, telegraphic transfer. It can be in form of anything. Similarly, contracts can be in form of anything. It can be in form of options, it can be in form of calls, it can be in form of this swaps, okay, anything. So both of them are defined as a forex, foreign exchange. Okay, it can be bill of exchange also, which is drawn. So any negotiable instrument. So the answer is section 2. Section 2 defines. Which of the following LCs enables the beneficiary to avail a pre-shipment credit at the issuing bank's risk by the corresponding bank? So which of the following LCs enables the beneficiary to avail a pre-shipment credit at the issuing bank's risk? So pre-shipment credit, which LC will allow the pre-shipment credit? Firstly, what is pre-shipment credit? What is this pre-shipment credit? See here, there are 2 types of finances. Basically, this is a part of your export finance. There are 2 types of finances. Okay, one is pre-shipment, pre. and second is post shipment. Post shipment. Okay. So pre-shipment and post-shipment. These are the two finances available. Pre-shipment means what? Before the shipment. Means this finance I'll be using for manufacturing. Manufacture. Okay, manufacturing. So here it means what? When I say manufacture, it means what? It includes your labor, it includes your raw material, it includes your other expenses, okay, whichever are required for the manufacturing.